thanks for joining me on my market report. My name is Mike, and if for those of you who are new to my channel or my video, we create these videos on a daily basis on mortgage rates, what impacts them on a daily basis, as in maybe something geopolitical came up, or something from the headline news, or perhaps some economic data that popped up, and that is what's impacting it. So, and sometimes we get news that comes in that would be good news, but however now is bad news. And if you're on the sidelines, you may not know why that is, or what's going on, and may be confused. We're here to kind of go point these out for you, so that way, if you're out there in the real estate market, you got a better idea of what's going on. If you're in a consumer looking to buy or refinance and watching rates, we're here to hopefully give you the information you need to try to help you to make an informed decision for yourself, whether you want to lock in on a rate or if you want to continue uh, uh, floating a little bit until you try to get a better rate. Hopefully these videos will help you out with that. A little bit about myself is I am a loan officer. I do work with a national lender, so we do loans in all 50 states. So if you guys got questions about refinances or purchases or mortgages, or we're here to help you guys out. So please feel free to reach us out through the social media site you found us on, and we can certainly work our way back and forth in communication how we can help you guys out. So without further ado, why don't we jump right into it? We'll start off with the economic calendar. Every Wednesday, we get the MBA releases their mortgage loan activity report. So it kind of lets us know if purchases are up or down, or if refinances are up or down. So as we see on this report here, the purchase dropped a little bit. However, the refinance, because rates did drop a little bit, we had a bit of a spike for refinances. Now, the big one this week is the GDP. The final revision for third quarter came in, and it came in. It jumped. It did move up a little bit. It went from 2.1%, even though we had forecast 2.1, came up at 2.3%. So that would be the final revision for the third quarter, which is good news. And then the other good news is consumer confidence. There's a report that came out, and initially it was at 109.5 back in November, but got revised higher to 111.9. Forecast was calling for 110.8. However, it jumped up to 115.8. So people are feeling a lot better about where things are moving in terms of what's around them. Of course, the holiday season probably does not hurt either. Then lastly, we got the existing home sales as we see drop or move upwards. It was at back in October, it was at 6.34 million seasonally adjusted units. Forecast was calling for 6.52. It did move up, but just not quite high as was expected at 6.46. That was three months in a row we've seen this increase, so that's good news that we're seeing existing home sales. So the real estate market is still continuing to move here. So next will be basically mortgage-backed securities. See what's going on with mortgage rates. We'll kind of increase so you can get a better look here. We did start off the morning much lower. We're starting to see a reprice because we did improve right now. So we were in negative territory when we started off here, as you can see, at 101.84. And we closed here at 101.97, so that's 13 basis points. So we're open the day down 13 basis points. Now we're up 3 basis points. So that's going to lead the lenders to reprice that open up early on. Mostly East Coast lenders reprice for the better. So right now our pricing should be closer to what we ended the day yesterday. For those on the West Coast, we're probably pricing closer to this right now. So they may not have a reprice, but unless it continues rising further up. But at this point, we're not really seeing a whole lot in terms of price changes right now. So for us on the West Coast, price will be unchanged. For those on the East Coast, it'll be more or less unchanged, but it will be better than what we saw because it came in worse. So they saw worse pricing, and that should be pretty right about now. You're starting to see some, as you can see, reprices. A couple have already came in with better pricing. And here's the volatility we'll look at today. So we saw way down here, jumped up, and it came way back down again, and worked its way up. Now it's kind of going more or less a sideways pattern here, kind of slowly increasing a little bit here. Give a gauge of what it looks like on a daily basis. Let's see here, and then we'll take a look at the yields. And yields are doing their part as well. They touched out that new technical level, trying to work its way down back to the 100-day moving average. We're seeing just under 1.46 right now. And yesterday we did, as you can see here, that little wick touched off the 25-day moving average. So that's pretty much about it. There's not a lot of liquidity in the markets because, as I mentioned in the past too, we do see some of these spikes. It could be a little irrational at times because we got a lot of small um, day traders working, and sometimes that creates a little bit of it depends on the movement that they do. It could create a little volatility in the markets because we don't got a whole lot going on, a lot of volume out there right now. So those little spikes can create bigger spikes. So here's what the national average for conforming limit rates. 30 years at 3.22 right now, and the 15 years at 2.55. So those are looking pretty decent right now. And if again, those have points built in. Those are national averages, and that's again conforming loan limits. Not to say that they're not jumbo or anything else. So all those have different loan programs, and of course, rates are not one size fits all, as they got a lot of variables that make up what a rate would be for any one individual person. So we can talk about that more if you guys would like. I don't want to bore you guys with it, but if you guys like these videos, please smash that like button. It certainly helps us out, and thanks for watching. If you guys got questions, please, again, feel free to reach out. We're here to help you guys. Take care and have a great rest of your day. See you in tomorrow's video. Bye-bye.